Most people think mortgage rates are just a random number set by the bank. Well, they aren't. They're a pulse. And right now, that pulse is racing for all the wrong reasons. We were told the war was the problem. Oil hit $117 and everything got expensive. But the war is ending and peace is here. And oil is back to 70. So why does it still feel like the system is designed to keep you from owning a home? Here's the reality. While you were watching the news about the peace process, inflation was quietly climbing in the background. Headline inflation just hit 4.1%. That's the highest we've seen in 3 years. The Fed's target is 2. But we've been over this for 5 years now, and this is where the trap is set. And new Fed Chair Kevin Warsh says his favorite number is called the Dallas Trim Mean. It says inflation is only 2.4% if you ignore the shocks like oil and food, but you don't get to ignore those when you're paying your bills. You feel that 4.1%, and that's why the bond market is spooked. We see the for sale signs. We see 496,000 new homes on the market. It looks like plenty of supply, but here's the scary part. Only 118,000 of those homes are actually finished. The rest, they're just holes in the ground or wooden skeletons. And new home sales just plummeted 7.3%. It's the second lowest sales pace in nearly 4 years. People aren't just waiting. They're being priced out by a median price of $420,000 while supply remains a ghost. The government says the economy grew 2.1%. They say unemployment is low at 4.3%. But does it feel that way to you? Most of that growth was driven by AI investment and government spending, not your bank account. Look closer at the labor market. People are turning to gig work and freelance roles just to keep their heads above water. It's a phantom workforce. Continuing jobless claims are rising, meaning if you lose your job, you're staying unemployed longer. It's a squeeze on the middle class that the standard numbers, they just don't capture. And there's a massive clock ticking in Washington. Government accountants just warned that Social Security will hit a 22% payment drop by 2033. That's the looming backdrop for every financial decision you make today. But there is a flicker of hope. It's called the 21st Century Road to Housing Act. This bill passed the House and Senate with ease, and it's a big deal. It tries to curb large corporations from buying up single-family homes and offers grants for home repairs. But there's a twist. It's currently stuck on the president's desk as a bargaining chip for voting reform. If it passes, it changes the game for the first-time buyers, veterans, and investors alike. This is why you can't just watch the news. You have to watch the data. If you're a veteran, a newlywed, or someone looking to use the equity in your home, these shifts are either your biggest threat or your greatest opportunity. At Mercantini Home Loans, we don't just clear titles, we clear the fog. We track these weekly updates from the jump in personal consumption expenditures to the specific inventory levels in your backyard. We provide the mortgage education you need to stop guessing and start growing your wealth. The market is moving faster than the headlines. You can't afford to be 2 weeks behind. We've built a bridge between the global economy and your front door. I'm Jim with Mercantini Home Loans. We are your one-point solution for all residential mortgage needs. Whether you're navigating this high inflation trap or looking to leverage your home's value, let's have a real conversation about it. Visit our website at merchomeloans.com to schedule a free consultation, because the system might be complex, but your path to wealth doesn't have to be. If you want to keep seeing the truth behind the numbers, do us a favor and hit that like button. It helps us reach more people who are tied to the noise. Make sure to subscribe and turn on notifications so you never miss a market shift. We're in this together. I'll see you in the next one.